Hi there, I'm using Verbalate AI video translation and lip sync software. It's pretty amazing. Watch this.
I can translate my videos into other languages. For example, I am now speaking Hindi.
नमस्ते। मैं पहली बार हिंदी में बोल रहा हूं, लेकिन वर्बलेट इसे इतना आसान बना देता है।
Or how about Spanish?
Hola, vaya, increíble.
También puedo hablar español.
Sign up at verbalate.ai today to gain early access to trial the product for creators and strategic partners, and gain the ability to translate and lip sync videos in all major languages. You can view the info in the description below. Now, onto the video. It's Lee and welcome to the Tesla Economist. I want to do a forecast on what Tesla's earnings might look like in 2025. Except that's obviously impossible to predict. So rather than me saying I think Tesla's earnings for 2025 will be this much with a P/E ratio of this, then the company value will be this. Instead, let's explore how much Tesla's earnings will be when various elements of the company have reached critical stages and work back from there. The 2025 timeline is actually the date I'm using to estimate that these elements are up and running. So let's set the stage. Firstly, we're going to assume or hope that we have gotten past all this inflation recession nonsense and the economy is in a more stable place. And interest rates have dropped somewhat, so we're dealing with a more realistic market. Next, we'll also say that Tesla have finally hit capacity for Texas and Berlin. I'd hope that Tesla can achieve that alone with their 4680 production, but if not, then they'll be supplemented by Panasonic's 4680s, and we are talking about in 2 years' time. More than likely, there will be more LFP cells available from CATL too, which could be used in these factories. With that, I'm putting Tesla's combined production for Model Y and Model 3 at 2.5 million a year run rate. Now, some people think this number is low, so let's address that. Firstly, if it's any of you, then let me know why, but I don't see where Tesla are going to get any extra production for the Y and 3. I'm creating the numbers based on the current factories at their capacities. Tesla is done with the Model Y, and certainly the 3, at least in terms of new factories. They aren't about to build a new Model 3 factory in Berlin or a Model Y factory in England or something. These models are at market saturation at the right clearing price. Tesla have found new production techniques since, and these two models don't fit in the process without a major redesign, which would thus mean a different model vehicle. Tesla are looking forward. In this scenario, we will also include the Cybertruck. Now, I'm sure I'll get a lot of backlash here, but I'm just giving it 250,000 units a year run rate. I think the Cybertruck should hit that by 2025. Sure, the target is to hit that sometime in 2024, but even if Tesla did, Elon recently said production will probably be around 250,000 a year anyway. Sure, he said they will make as many as people want, but this is the figure I'm locking in for 2025. We'll take the two Megapack factories, Lathrop and the new Shanghai, at their capacities of 40 gigawatt hours a year each. Then the other big thing is Mexico. If things go well, then Tesla could hit a 1 million a year run rate for that compact car by the end of 2025, if it is everything Elon says. Although in all honesty, I would probably add a little more to that timeline, perhaps sometime in 2026. But these financials are more about how profitable Tesla will be once these projects are complete. And that's that. No FSD or robots. No point doing those, as they're binary. If Tesla solve FSD, then the stock price goes to the moon. If Tesla can manufacture robots to replace labour, the stock price goes to the moon. I'm also not including the semi-truck. I'm also not including the van, and assuming all vehicles from Mexico will be just the compact at this stage. Alright, so let's look at the numbers. Just to be clear, this is not a 2025 earnings report, this is more an annualised cross-section of what perhaps around the end of 2025 might look like. But in reality, it's really the earnings when the current projects are completed. This gives us a total of almost 4 million vehicles, which is actually quite a decent run rate. Still not quite the 50% growth, but it's starting to get up there. Remember, this is more the run rate I expected at the end of 2025, not the total vehicles produced in 2025. I know a lot of you probably want to say it would be much higher, but car manufacturing takes a long time to go. However, if Tesla can rinse and repeat their new product, the machine that makes the machine, i.e. Mexico factory, at a good rate, then maybe we'll see higher growth again. I've added some prices for each of the models too, based on where I think prices will be factoring in the economy, demand and Tesla's costs, which have hopefully reduced somewhat over the next couple of years. They don't include the tax credit either. it comes in at an ASP of $36,000, which I think most of you would think sounds about right, and total revenue of $137 billion. Now that's a big number. So let's see how much profit is there. I'll start by placing a 20% gross profit margin on these cars. This is hopefully on the lower side of what Tesla should be aiming for, with the right market clearing price and the supply that Tesla are producing. I'm giving another $5 billion in subsidies from cell and battery manufacturing. I get $40 billion from megapacks. I'm going to put 20% margin on those, and 15% margin for services and other. This gives us a total of over $43 billion in gross profit. Now, in all fairness, there's probably going to be new factories ramping at the same time that may be generating negative profits, but these would inevitably start producing more income over time. When we extract $10 billion of OPEX from that number for $32 billion of operating profit. After interest and tax, we have $29 billion in earnings, or $8.83 EPS. With a PE ratio of 50, we have a market cap of $1.45 trillion, which would be an all-time high, with a stock price of $460. You can say PE ratio 50 is too high or too low. It's kind of irrelevant as it changes so often with sentiment. But what we can say is that if the stock price was the same as today, then the PE ratio would be 16, which hopefully does sound quite low. Especially given that in this scenario, Tesla have achieved a lot of success with these projects, like Cybertruck ramp, Mexico's new production, and Megapacks. And remember, this doesn't include any FSD advances, which may hopefully be getting much lower on interventions by this stage, and possibly with an end in sight, at least one the market may be able to judge, which could mean there is a higher PE ratio. Also, possible a new factory on the way or more, and the chances that Tesla's bots have reached the level that they are capable of replacing some tasks that are currently done by humans. All of those things could be argued to increase the PE ratio. However, it would all be based on the earnings we've just estimated. You may not be happy with my $4 million a year run rate, but either way, I'm sure many of you will be happy if Tesla hits $400 again, which it may very well if this is all achieved. There is enough in earnings to get it there, although I'm sure many of you are maybe not happy with just $30 billion in earnings either. It's not massive growth, given it's only double what Q4 2022 was equivalent and annualized. If there's anything you disagree with, then please let me know in the comments. And don't just say something like the run rate would be 5 million. Tell me something specifically that will be different and tell me why. I value all your feedback and take it all into account. So please offer value in your comments too. Some people just react to confirmation bias and don't always like my numbers, but they've been clearly presented for you all to see how I arrived at every figure. However, Q1 this year was $2.5 billion in earnings, which annualized is $10 billion a year. So this would be 3 times the earnings that we're currently at. Also, bear in mind, I used only a 20% gross margin, which is actually on the lower side. Elon said they expect around 20 to 25% margin. With 25%, we're at over $36 billion in earnings, which is actually getting quite substantial. And it's possible if Tesla are going to get costs down and the interest rates drop. Anyway, as long as these projects go as well as this, then it's highly possible the stock price might double in the next couple of years or so. And like I said, this doesn't factor in FSD either. A lot has progressed with FSD in the last couple of years, so equally we might expect similar progress again over the next couple of years too. And the semi-truck too. It's hard to know the timeline on that vehicle, and will likely mainly come down to 4680s. But it could add more revenue, hopefully too, along with other new factories that could pop up over that time, including another potential Megapack factory, I would hope maybe in Europe too. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.